So, you know Michael Saylor, right? The Bitcoin maxi who went all in on Bitcoin with MicroStrategy? Well, his massive bet has made the company a symbol of institutional crypto conviction. Today we're diving deep into MicroStrategy's Bitcoin gamble, what they did, why they did it, and the potential consequences if things go south. Spoiler alert, it could get messy. We're talking margin calls, forced selling, and a domino effect that could ripple through the entire crypto market. So buckle up because this is going to be a wild ride. Michael Saylor's MicroStrategy has become synonymous with institutional Bitcoin adoption. But this kind of conviction sometimes looks less like confidence and more like leverage. Saylor's bet is that Bitcoin is the future of finance, a digital gold that will outperform fiat currency in the long run. Saylor's strategy is simple: buy Bitcoin, no matter the price. He's been on a buying spree, accumulating over 129,000 Bitcoin for MicroStrategy, even as the price has fluctuated wildly. His thesis is that Bitcoin is digital gold, a hedge against inflation and the eventual collapse of fiat currency. But history has shown time and time again that even the smartest bets can go bad when leverage is involved. The problem is that leverage creates a house of cards, and that's the risk MicroStrategy is facing right now. Remember Lehman Brothers in 2008? They were considered too big to fail, until they did. They had a strong balance sheet, fancy derivatives, and a great public image. But then the housing bubble burst, and their leveraged bets on mortgage-backed securities imploded. One day, they were a titan of finance. The next they were filing for bankruptcy. The point is, no one is too big to fail. When leverage is involved, even the smallest crack can bring the whole structure down. MicroStrategy didn't just buy Bitcoin with cash, they went all in, borrowing billions to maximize their exposure. They took out loans, issued convertible notes, and even sold senior secured notes to buy more Bitcoin. Many of these loans are secured by MicroStrategy's own stock, $MSTR, or Bitcoin itself. If they can't come up with the cash, they'll be forced to liquidate their Bitcoin holdings to pay back their lenders. For a while, Saylor's strategy seemed to be working. Bitcoin's price was going up, and MicroStrategy's bet was paying off. But that's the thing about bubbles, they eventually pop. Now, with inflation soaring, interest rates rising, and the global economy on shaky ground, the crypto market is facing strong headwinds. The more Bitcoin Saylor buys, especially with borrowed money, the more fragile MicroStrategy's position becomes. And that's a dangerous game to play, especially in a market as unpredictable as crypto. Don't just take my word for it. This isn't speculation. It's all laid out in black and white in MicroStrategy's own SEC filings. In their disclosures, they clearly state that if the price of Bitcoin falls below certain thresholds, they may be required to sell Bitcoin to satisfy their loan obligations. When you borrow money, you're beholden to the terms of the agreement, and in this case, those terms could force MicroStrategy to sell Bitcoin at the worst possible time, potentially triggering a further downward spiral. And right now, the bears are starting to circle. Yesterday, the Federal Reserve held an emergency meeting, and the financial world held its breath. The markets were on edge, bracing for news of a rate cut or some other form of intervention to calm the recent market turmoil. But then, silence. No public statement, no press conference, no tweets from Powell. This deafening silence speaks volumes. It suggests that the Fed is not yet ready to abandon its hawkish stance on inflation, even in the face of growing economic uncertainty. The markets were looking for a sign, any sign, that the Fed was willing to pivot. But instead of a reassuring nod, they got a closed-door meeting and a whole lot of nothing. This unexpected silence sent shockwaves through the market, signaling that the Fed might not be the knight in shining armor that everyone was hoping for. This doesn't bode well for risk assets like Bitcoin. As if the macro environment wasn't already precarious enough, the US just announced a whopping 104% tariff on Chinese electric vehicles and tech imports. This isn't just a minor trade spat, it's a full-blown economic escalation that could have far-reaching consequences. China is not going to take this lying down. They're almost certain to retaliate, either with counter-tariffs on US goods or by restricting capital flows. This tit-for-tat trade war is only going to exacerbate the existing tensions in the global economy, leading to more uncertainty and volatility. For investors, this means one thing: buckle up. The news of escalating trade tensions sent shockwaves through the crypto market, with Bitcoin taking a nosedive and flirting with the $77,000 level. This sharp drop is a clear sign that investors are getting spooked by the increasingly uncertain macroeconomic backdrop. This flight to safety could put further downward pressure on Bitcoin's price, potentially pushing it below key support levels. And for MicroStrategy, this is where things start to get really dicey. Now, I'm not saying that MicroStrategy is going to disappear overnight. They still have assets, they still have revenue, and they still have Michael Saylor at the helm. But the current setup is eerily similar to previous market blowups: a charismatic leader, a bold bet, a ton of leverage, and a sudden shift in market sentiment. Remember long-term capital management? They thought they had cracked the code to the market. But then Russia defaulted on its debt, and their highly leveraged bets imploded, nearly taking down the entire financial system with them. The point is, when pressure mounts, it rarely unwinds smoothly. Saylor's average cost for his massive Bitcoin stash is around $66,000 per Bitcoin. That number is burned into the minds of crypto investors everywhere. If Bitcoin closes below that $66,000 mark for an extended period, those margin calls could start coming in hot and heavy. And if MicroStrategy is forced to sell Bitcoin to meet those calls, it could trigger a cascade of selling that sends the price of Bitcoin even lower. The market is already showing signs of stress, and if the macro environment continues to deteriorate, things could get much worse. It's fascinating how quickly things can change in the world of crypto. Back in 2013, Michael Saylor famously called Bitcoin a joke. Fast forward to today, and he's one of the biggest Bitcoin whales in the world, with his company holding a staggering amount of BTC. This dramatic pivot, from skeptic to evangelist, has left many people scratching their heads. Saylor's actions have put MicroStrategy squarely in the crosshairs of the crypto market's volatility. So, what's the real danger here? What happens if Bitcoin's price does indeed crash below $66,000, triggering those margin calls and forcing MicroStrategy to sell? It could create a domino effect that ripples through the entire crypto market. First, MicroStrategy's forced selling would put further downward pressure on Bitcoin's price, potentially triggering stop-loss orders and margin calls for other leveraged investors. This could lead to a cascade of selling, as more and more investors are forced to unload their Bitcoin holdings. Every time the market crashes, there's always someone who says, "It's different this time." They point to new technologies, new regulations, or new economic theories to justify their belief that this time, the old rules don't apply. But history has a funny way of repeating itself. Remember the dot-com bubble? People said the internet would change everything and valuations didn't matter anymore. Then the bubble burst and countless companies went bankrupt. The point is, human nature doesn't change. Now, I'm not saying you should panic and sell all your Bitcoin, but it's important to be aware of the risks, especially when it comes to leveraged bets in a volatile market. Don't blindly follow the hype or the narratives. Even if they come from charismatic leaders like Michael Saylor, stay informed about what's happening in the macro environment. These factors will have a major impact on the crypto market, whether we like it or not. Remember, Bitcoin itself is a decentralized and resilient technology. Look, I'm a big believer in Bitcoin. I own it myself. But I also understand that it's a volatile asset, and it's important to manage your risk accordingly. What MicroStrategy is doing is not investing, it's speculating. They're using leverage to make a huge bet on the direction of Bitcoin's price, and that's a risky game to play. So stay informed, stay vigilant, and don't be afraid to go against the crowd.